Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. Today I want to talk a little bit more about keeping your trading simple. Oftentimes we get too wrapped up in these complex trading strategies or techniques and we miss out on some ample opportunities by looking at just some of the basics. One of the basics that I like to look at is oftentimes if price action is going one direction and the trader's dynamic index is going in the opposite direction. This is referred to as divergence. And down below, the trader's dynamic index often reflects sentiment in the marketplace. If the sentiment is going down, eventually price is going to go down. If sentiment's going up, eventually price is going to go up. That's just kind of how it works. Now again, divergence is an indication of what we expect in the marketplace. It's not necessarily a signal. But in keeping it simple today, I just want to share with you a divergence play that happened not once, not twice, but 3 times today. And we had some decent trades today. So let me just show you a few of the trades that I picked up today. One was in the pound. Now take a look at this. We have price action up above. Okay, this is the synergy model where we have price action, have the synergy average price bars, the price action channel, and the trader's dynamic index down below. And I've simply added the dots method indicator on the side just so I can see some potential targets to reach. Now take a look at this. We can see that price is going down and down and down. But at the same time, we have these lower lows coming across. We have higher lows in the trader's dynamic index green line. That's divergence. So I've got this going up, and let's keep it pretty simple. It's pretty basic here. Lows are going higher, but over here, the lows are going lower, except for this one low right here, that one little spike down from a news item. This was the Bank of England's inflationary report hearings. And we had some comments from the Monetary Policy Committee. Gave a little spike, but other than that, came right back up. But we had continued lows. This is what's referred as divergence. Sentiment is suggesting upward move. Price, though, is kind of fighting it. That's just the way it kind of works. Now, check this out. This is the play. This is how we go about trading this. When price is going down and sentiment is going up, showing a positive divergence, showing a buying potential to the upside, here's what we do. Place a trend line along the highs, the lower highs that we have going on. If we get a close on the other side like we did right there, and we get continuation, boom, there's your buy signal. Now where do we go to? Well, look where this buy signal came in at and pushed right up and reached the 57.10. I played this today up to this level and then continued playing it up to 157.20 because that's the 618 retracement from the 2013 low to the 2014 high. 157.20 is a 618 retraceable. I felt like the institutions would push back up to 157.20. But look what I did. I had the lower lows and the higher lows. That is positive buying divergence. We're looking for an upward shift. If I draw a trend line across the highs, I look for a close on the other side in continuation. Bam, that is my entry. Let's take a look at another one here. Take a look at the dollar CAD today. Notice that the dollar CAD, I'm getting these higher highs in price, but I'm getting lower highs in the trader's dynamic index. This is referred to as negative divergence, bearish divergence, selling divergence. Okay, we're looking for price to eventually turn and go down. So at this point, when I get the divergence signal, more or less, okay, I'm getting an indication of negative divergence, I simply place a trend line along the higher lows and I look for a break. Now, if you're using the synergy model, we also look for a break below the price action channel, and we get that. So here we go. We got this moving down. We got a trader's dynamic index moving down. I applied the dots to it. I'm already in on this trade. As a matter of fact, I entered short on the dollar CAD today at 112.75, and I got out right in front of this area. Out at 112.44 is where I exited the trade. That was a nice little trade for about 33 pips. Again, I'm just simply using the divergence play. When you see divergence, look on the other side of price, draw a trend line along the higher lows or the lower highs, wait for a close on the other side. Once it closes and continues in that direction, you're ready to go. And that's what we had here. We had a close right there, okay, a close of 1289. The market continued pushing on down. I was really looking to see if it would push below the open of the New York session, and it did. Boom, I'm into my trade. Now let's take a look at another one. This was actually during the New York session. The pound Aussie was making a push to the upside. You can see this little move up. Well, at the same time as this is moving to the upside, it made a pullback. Again, what does this look like? Doesn't this look like a divergence play? It is. We're getting higher lows in price and lower lows in the Traders Dynamic Index. Now, this is a little bit different divergence. This divergence over here is known as regular divergence. Lower lows, higher lows. In this case, we're getting higher highs, lower highs. This is referred to as regular divergence. Regular divergence is a reversal. We're looking for the market to reverse and go the other direction. That is regular divergence. Market was going up, reverses, and goes the other way. Hidden divergence, and it gets the name hidden divergence, is hard to see sometimes. Hidden divergence is a sign of continuation. We're looking for the market to continue moving the direction it's moving. Check it out. The market makes a pullback. Can't pull back as far as some had expected, and has a higher low than the low that we started. But yet, the Traders Dynamic Index, we have this low, and we make a lower low. That is hidden divergence, and this is a sign of positive, bullish, hidden divergence. Lower lows in the Traders Dynamic Index, higher lows in price suggest upward movement. So guess what I did? I see this hidden divergence. I put a trend line across my lower highs. The market closed on the other side. Right there, it closed at 83.80. It opened up, and I placed a trade today at 183.83, and my target was up around the 184.20-25 area, right in front of my buy target number 2. The market pushed up into this area, kind of chopped around, and I was out of the trade. Look for this divergence play. It happens over and over again. Today was an exceptional day of this particular setup happening over and over again in the marketplace. So again, you don't need a bunch of tough, hard strategies out there, just some basic strategies that work over and over again, and you have ample opportunities to pick up some pips in the marketplace. Well, this is Dean Malone with Compass FX. Take time to go back over this video and learn more about this divergence play using the synergy model or using the dots. If you want to learn more about the synergy model, go over to www.compassfx.com/synergy. Learn about the dots. Go over to www.compassfx.com/dots. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.